Good afternoon, good morning. It's Gary with Daily Stock Pick. I've got Steve Cress on. Steve is the leading architect behind Seeking Alpha's Alpha Picks and Seeking Alpha Quant. When you go on Seeking Alpha and you look, Steve is the guy behind the scenes with all of this stuff. He is the legit deal. He spent years at Morgan Stanley honing his experience on quantitative research and market analysis. He ran his own hedge fund. Today, I'm excited to welcome Steve, and we're going to talk about Seeking Alpha platform, Alpha Picks, the ProQuant portfolio, everything that you need to use in Seeking Alpha to actually better understand the market and find opportunities. Welcome, Steve. Thank you.
Hey, Gary, thank you so much for having me today. I really appreciate you organizing this.
Yeah, one of the things, Steve's got a deck that we're going to go through that he was nice enough to prepare. One of the tools that we were just talking about it before I forgot to hit the record button, but we were talking about the portfolio. One of the things I love that you do is when you use the platform on your webinars and you show me where to go, what to do, and how you have it set up. And those portfolios, it's an underrated thing to have a bunch of portfolios. So you were just talking about, let's talk about it again, because you said you set it up based on themes and ETFs.
Right. Well, I'm a portfolio junkie. So most individuals, they'll have several portfolios set up. Maybe their overall portfolio, maybe one for like their son or their daughter or their wife. It feels like you could almost have an unlimited amount of portfolios on our platform. So I love to monitor the themes that are out there. So I'll look at cybersecurity, I'll look at drones, I'll look at cannabis baskets. I will look at European portfolios, Chinese portfolios. So just a vast array of portfolios. And every day, like I can see what theme is performing well, what's not performing well. But the beauty is, and what I do is I actually will go to ETFs. And I'll take all the securities that are listed in an ETF and I'll upload it to the portfolio. And this way, instead of having to buy the ETF, I can actually buy the best stocks in the ETF. So our portfolio system will rank what stocks are a strong buy, which are sells, what are strong sells. And you can find like a good theme, but that doesn't mean all the stocks in the theme are going to work. And the great thing about our quant system is we rank stocks and we rank them against their own sector. So we know which companies are strong and which ones are weak. So I love using the portfolio tool just to like monitor themes. But then when I really want a stock that's good within that theme, I know where the strong buys are.
It's kind of like Kathy Wood's ARK fund getting shorted in 2022 because people were just taking her research and saying, oh, I love this one, but I hate this one. And then they were shorting the stocks in her fund and shorting her fund. So
I think one time I actually had loaded up the stocks from her fund to the portfolio tool. And like it would tell me which stocks, she did the research on that I thought were strong buys and, the ones that I would avoid that had the sells on it. So I guilty of that. I did load that portfolio up.
honestly, it's a perfect scenario because we just had a meme ETF that was launched today with Open Door and BMNR and all of those kind of craziness. In fact, I'm actually invested in a couple of those. I will tell you, one of my best decisions lately was I took half of my Palo Alto position because that's bumping right up. And I don't. Do you use technical trading at all in your research?
We use momentum
Okay.
indicators. So momentum as an indicator is actually one of the best indicators out there. If you're looking compared to value, growth, profitability, there are empirical studies that literally go back over 200 years that show that momentum as a factor is one of the most predictive factors in terms of future stock performance. So in a way, like I don't consider momentum really like technical analysis, but in a way, it's very similar.
And I do SPMO, I think is the S&P Momentum ETF, and that's just been outperforming. It's clear momentum wins, but I actually chose half of my Palo Alto position, which I noticed just from a technical standpoint, it was bouncing up against $200 for the last like year and a half, maybe year. And so I took half my position, and I put it into IREN. Just based on some information that I was able to use Seeking Alpha to do. And so far, I think during the time period, Palo Alto Networks is up 5%. So you could be upset that I did that. But IREN is up 240, 250%,
Nice.
somewhere in that neighborhood. So it was one of the best. And I did notice in the meme stock that one's in there. But Again, when I look at it against something like a Nebius, and I use Seeking Alpha all the time to do that research, when I look at it, it just seems undervalued. So again, we're going to get on the road with this deck that you prepared, which is so nice.
Yeah, well, let me. I'll get into it. And unfortunately, our legal department insists that I always do this disclaimer. So bear with me, and I really appreciate your patience. You got to try to read this quickly. We're not advising you personally concerning the nature, potential value, or suitability of any particular security. You alone are solely responsible for determining whether any investment, security, or strategy, or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. This presentation is for information purposes only. Content is presented as of the date published or indicated and may be superseded by subsequent events. It represents my opinions, which may not reflect the views of Seeking Alpha as a whole. Past performance is no guarantee of future results. Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank. Thank you for your patience, Gary, on that.
I appreciate it.
I think you gave a little background on myself. I've been in the world of finance for about 35 years, so a little bit of tenure there. The bulk of my career was at Morgan Stanley, where I worked for 13 years, and I ran a prop trading desk in quantitative strategies for the bulk of my career there. As Gary mentioned, I also founded a hedge fund, which I ran out of Europe. And while I was running the hedge fund, I also started a fintech company, which Seeking Alpha later bought. And part of the deal was I had to join them to integrate my technology into the platform. And I haven't left because I really like it here. So a
And
little
we
bit
get
of
the
my history.
benefit, by the way, of everything you develop because I use that quant constantly.
Yeah, it's like one of the great things for me is I can really put time into like research new products, create better products for subscribers, and the performance obviously speaks for itself. There's a big track record there, but I do really enjoy putting products together for individual investors and for retail brokers. And by the way, there's a lot of institutions that use my work as well. But really, the joy is creating sort of a user-friendly experience for people out of something that's pretty complex.
Yeah, no,
Uh,
the quant is constantly, I'm constantly saying, well, it's a strong buy in the quant, so it makes sense at this point. So no, and the five factors. I mean, honestly, I've been using this now for a couple of years, and I tell people work smarter, not harder, a lot of the time. And so I'm able to just look at those five criteria in the quant and say, you know what, this might be worth me spending money on. I think it was Peter Lynch said people spend more time researching a refrigerator, which costs you $1,000 versus putting $10,000 into a stock. And I'm guilty of that a lot of times, and a lot of times it does, hey, risk reward kind of thing. It works out, but a lot of times it doesn't. And we're in one of those markets where it works out a lot, and people think that they're smarter than the market, but the market has a way of humbling you every now and then too.
yes, but it's during those periods where you're being humbled where the greatest opportunities are. It's
Yes.
when you're freaking out the most and you're most emotional and you're wondering if your like investments are going to go to hell in a handbasket. That's the time that you want to be buying, and I'll actually show you that later in this presentation too.
Perfect.
So, a little bit about what we're going to cover here today is what is quant? Of course, we'll go over the current market and economic backdrop that we're in right now, and then introduction to alpha picks, which will, as Gary said, help you work smarter. And we will pick the stocks that have the best fundamentals for you and put it there on a silver platter.
Hey folks, just a quick interruption. Want to beat the S&P? Check out the Seeking Alpha bundle. Get premium research, Alpha Picks exclusive stock screeners, and unlimited analysis, all with a free 7-day trial if you choose to just get premium. You'll save over $150 on the bundle. So get loads of features to level up your investing. Choose the plan that's right for you. Get special savings at Linktree/Daily Stock Pick. Now back to the video.
So, getting into the presentation, our quant vision is to eliminate emotional investing and uncover top stocks using data-driven tactics. Which is, as I was sort of referring to before, sometimes when you're at your scaredest, we want to really take that emotional factor out and have you make decisions based on data and not emotions. So, what is quant? Quant is, as I just said, it's a data-driven process. But really, Gary, to tell you the truth, quant, the way we use it, It's really taking what any analyst would do at Morgan Stanley or Goldman Sachs or Merrill Lynch. We're looking at a company and we're looking for companies with good fundamentals versus their competitors. And Quant does that on steroids. So we use a lot of math and we use a lot of algorithms, but what we're trying to get at is like finding those companies that are collectively strong on value, growth, profitability. And we also look at analyst revisions. We're trying to look for companies that have strong analyst upward revisions. And we're looking at momentum as well. And many analysts will do this on a day-to-day basis. The only problem is, and I was an analyst myself, you could only really cover maybe a dozen companies. You have your super experience, maybe 15 to 20 companies as an analyst. There's only so many companies as a human being that you're capable of following and maintaining your research on. So a lot of times, analysts, if you cover 12 companies, you're lucky if you get out like one research report a month on a company, and maybe you get a couple out altogether over the course of a month. What we do with the quant system is we basically take that knowledge of an analyst, we introduce it to a computer, and it gives us the ability every day. We have a universe of about 5,000 stocks and we go through the cash flow statements, income statements, balance sheets, hundreds of financial metrics, and we compare stocks to other stocks in the sector and we rank them. So, computer and the power of processing gives us a capability that we don't have as a human being. So, the fundamental approach is the same, but we're just plugging it into computer. So, instead of just covering a dozen companies and providing sporadic research, we cover 5,000 companies and we provide a fresh daily recommendation every single day. So
That's
that's
key
really
that
what Quant is
it updates every night. So
every night. Yeah.
yeah, and one of the things you guys gave me access to the ProQuant, the Pro level service, and one of the things that I've found myself using every day is that upgrades and downgrades. And so I'll go in there and look at, okay, this one moved from from a buy to a strong buy, or a hold to a buy, or if it jumps from a sell to a strong buy, it's a pretty solid move. And so I think that it's like I tell people, you can't have 80 stocks in your own portfolio and effectively manage 80 stocks. You're just not. You're gonna miss things. So one of the things that I love about Seeking Alpha is not only can I just go to my own portfolio and scroll down, but I can find the opportunities because I have a team, essentially, a computer working for me, updating those 5,000 stocks nightly, and I can see exactly what, and I can go in there in the morning and check that upgrades and downgrades section, and I like it.
Yeah, and it's a great tool. I mean, if you like trading on a daily or weekly basis, you're going to want to look at those upgrades and downgrades because you're going to want to see where the action is.
Yeah.
Um, and that gives you sort of an instant characterization of where the action is, what's moving.
And I'll
Uh,
give you a shout out too about emotion. I'll take you back to April, where the big board came out in the Rose Garden. I think it was maybe a few days after that, you wrote to all the Alpha Pix subscribers, and I remember reading that letter, and it said, "Hey, Alpha Pix is a long-term portfolio. It's not a trading portfolio, and the portfolio should outperform on a rebound." We're now what, 6 months later, and oh my god, anybody, we'll go over the Alpha Pix performance, but there was no truer statement that I hung my hat on as I was
Thank
adding
you.
to that Alpha Pix portfolio, than hey, it's going to outperform because the proof is in the pudding. I track my portfolio personally, and I broke out Seeking Alpha recently over the past month, and I was shocked at the gains. And I managed both my portfolio and my parents' portfolio. And again, they were like, "Are you interviewing Steve Cress? Please tell him thank you," because we were ready to get out in April. And just me telling them about that note was just, it made people more comfortable. So me being comfortable in the setting that I can see the quant rating and your notes, it's just a perfect strategy for me.
Well, I appreciate it. You were, one of the brave individuals that did put more capital to work. Most people were like crying as these stocks were going down, and there was a big rotation into gold and cash and utility stocks, and they sell stocks that were in the portfolio to go into those safe havens. And that's all part of the psychology that happens during a market pullback. But having been through this a lot, I'm like, oh, wow. Like, the market's down 15%. My stocks are down like 40%, in some cases. You want to buy these because the fundamentals haven't changed at all. And if you have the courage that you did to do that, you were just incredibly rewarded. And there are a few people that told me they put fresh capital to work there, and just 6 months later, they cannot believe the returns that they had on buying those stocks that were beaten up back then. So kudos to you for having the courage to do that. And you could actually, it speaks to this chart that we're on right now. If you look at the far right side, you could see the massive pullback. And this is in alpha picks. What I'm showing you here is actually all our quant strong buys. This is a 5-year history of the quant strong buys. And you can see in this 5-year history, any given day, there's like about 350 quant strong buys that are out there. And if it's not a strong buy, it comes out of this. We refresh this on a daily basis. And we actually compare it to Wall Street analyst strong buys. So you can see over the last 5 years, our strong buys are up 256% versus Wall Street analysts up 53%, and the S&P 500 up 84%. The S&P does seem to always beat Wall Street analysts, but thankfully our quant system beats both of them. But going back to what Gary was saying, if you look at the far right side here in 2025, you could see the market really, well, our quant strong buys overall, not just alpha picks, but our quant strong buys really just started to get annihilated. And it had nothing to do with the fundamentals of the companies. It had everything to do with the marketplace and investors being scared and rotating to safe havens. And what happens when you rotate to safe haven? You sell typically stocks where you've made money, you take profits. And as a result, when people all take profits at the same times, that has a big impact on the stocks that have done well. Typically, our stocks do well, but in the face of that kind of fear, of course, they're not going to really be able to perform well, and they're going to come off more than the market. But you could see as soon as that fear dissipated and a sense of normalcy returned to the market, you can see if we were looking at the green line for the S&P 500, it came down a bit, and then it started to steady out and come back up. So that just sort of steadily rises. What happens with our quant stocks? They moonshot it. So as soon as like investors feel like the fear is out of the market, they come back into these stocks, and boy, oh boy, do they move. And you can see that's exactly what happened here. So, really, you just got to stay consistent, and you did the right thing. Instead of panicking and selling and rotating to safe haven stocks, you just stayed disciplined and you bought more, and you were rewarded for it. That's sort of longer term performance, and that's all the strong buys. We have two products here. We're mostly going to talk about alpha picks today, but we introduced a product actually recently back in June called the ProQuant portfolio. This is much more investable. That previous chart that I showed you is about 350 stocks. That's not really investable. You can buy those stocks, but as an individual to maintain that, you would need a computer and an electronic trading system to do that. But because we have a good track record, we have created a couple products that are investable. One of them I launched in June, and you can see from the performance here, the ProQuant portfolio is up 43.69% compared to the S&P on an equal weighted basis, up 8.29%. So this is a fixed portfolio of 30 stocks. It will always stay fixed, where Alpha Picks tends to have more ideas. And today we're really going to focus on Alpha Picks because it gives you diversification. It's less volatile than this product. This product tends to go in all market cap stocks. Alpha Picks has smaller cap stocks, but not as small as this one. But what I just wanted to show is that history from a longer perspective and from a really short perspective, because this is just since June.
And my trading style is more alpha picks than it is pro portfolio. And I do have access to the pro portfolio because I'm an affiliate. I do get it. One of the things that I've been using it for 2 weeks. So I don't have a very great track record of using it. I think it was funny because I was the other day I was thinking about when I first got into alpha picks, I thought I was going to be a genius. And I said, ooh, he's going to give me the ideas and then I'm going to buy them and I'm going to trade them. And technically I'm going to do this. And I quickly realized that I'm no genius. You guys, it was funny because I think it was in April or something. You put Sprouts Farmers Market. And I was like, yeah, I shop there. I love the stores. I love the products that they sell. There's no way I'm buying this. And I skipped it, Steve. I missed out on like a 200% gain on Sprouts Farmers Market while it was in the, and I think it's still in the portfolio, and I think it's pulled back a little. Um, but again, I didn't have the ability, quickly. I think I joined in February. I think by August, I realized I am no genius trader, and your portfolio was actually outpacing me picking the stocks for winners and losing and trading them on a technical basis. And so I just switched to, hey, I'm just going to buy and held. So my trading pattern has probably more towards alpha picks. But again, if somebody's trading on a daily or a weekly basis, you're probably fit for the pro portfolio, because from what I see, and again, the performance that you guys have, it's really good.
Yeah, well, you nailed it. Like if you're up for it, that rebalances it every Monday.
And
So
it's an equal
basically,
weight.
it's equal weighted. It rebalances every Monday. So I'd say on average, there's like 2 to 3 new ideas that come out once a week. Some people love that and it works, but Alpha Picks is 2 ideas a month. And
Yeah.
I think the majority of people are like 2 ideas a month definitely works for me. I don't need to be, trading, 15 stocks a week or something,
And
a month.
to track the portfolio, when you release it, you buy 1% of the portfolio value in that stock, right?
We do that. To be honest with you, the only reason why I do that is just to be transparent. I just I want people to know how we're sort of calculating the performance. I want them to know the price that it's picked at, the weight that it has in the portfolio. You definitely do not have to follow those weights. You don't even have to buy all the stocks. You could buy, if you're new to Alpha Picks, you could buy 3 stocks, you could buy 1 stock, you could buy just the strong buys, or you could buy the whole portfolio. A lot of people will try to buy the whole portfolio because they want to try to basically reconcile with the performance that we have. And with Alpha Picks, it is designed for long term, and I'll get into this. We keep stocks that go to holds for 180 days.
Yep.
So when we mean long term, we're really serious about it. But
I've
as
seen
you,
that. I've seen the drawdown when it goes to a hold on a few stocks where I said, ooh, I could pull out here and probably optimize myself a little bit more.
You know what? When the stocks fall to a hold, people will sell. But then we have people who are kind of wise and they're like, okay,
Yes.
I'm actually going to take advantage of that sell off, that dip, because I know what people are doing. They're going to hold on to this stock and they're holding on to it for a reason. And sometimes people take advantage of that dip to load up
Mm.
on it. And that does often work. When we get out of it is when the stock's been in the portfolio for 180 days as a whole, we're kind of done at that point. Like, it's been hold long enough.
Hey folks, just a quick interruption. Want to beat the S&P? Check out the Seeking Alpha bundle. Get premium research, Alpha Picks exclusive stock screeners, and unlimited analysis, all with a free 7-day trial if you choose to just get premium. You'll save over $150 on the bundle. So get loads of features to level up your investing. Choose the plan that's right for you. Get special savings at Linktree/Daily Stock Pick. Now back to the video.
All right, so let me sort of get into the market a little bit and what's going on. I'm sure people have a lot of questions. There's actually a fair amount of uncertainty at this point. The market's close to high, so people are like, is it going to keep going? Rah rah rah. Other people like, the CEO of like JP Morgan is like, I'm kind of nervous. Valuations are extended. Don't pay attention to anybody. Just do your own research and stay disciplined. But I'm going to give you a little bit of a backdrop where we are, and this sort of summarizes it. We're like in neutral territory. People say to me all the time, why do you use the CNN fear and greed with
I
all the
love it.
brokerage firms? Yeah, I love it too. Yeah, even with Morgan Stanley and Goldman Sachs, having really advanced like indicators, this covers the basics, and sometimes I find this like really a good contrarian like place to be. When this shows extreme fear, I'm like, yeah, that's the time to be buying,
Yeah.
Or I can't always say the same when there's extreme greed that you necessarily want to be selling.
Right.
But sure enough, when I see extreme fear, to me, that's like, oh, that's always a good entry point. Okay. Can't say use it necessarily as a selling point, but I could definitely use it as a good entry point. And where we are right now is we're like dead in the center. It's not saying there's a lot of fear in the market. There's not saying it's a lot of greed in the market, and it perfectly reflects the confusion you can get by listening to people on CNBC or all the strategists that are out
And
there.
by the way, we're recording this in early October. We are on day 8 of a government shutdown, and
Yeah.
nobody's being greedy and nobody's fearful.
It's looking back in history at the government shutdowns, I think people have learned
Yeah.
that you don't necessarily want to bail on your investments because of the shutdown. So I think the market does not come off as much as some people would expect during these government shutdowns.
I was screaming buy the dip. I never saw the dip.
Yeah, the dip hasn't come yet. Maybe we get to day 20, 25, 30, 40, 50. Maybe at that point, people will say, okay, this is crazy. But then, of course, you got to balance that the Fed's going to say, okay, like things are shutting down in the economy. So there's the potential, if it goes on for 40 days, that the Fed could cut rates by 50 basis points or 100 basis points. So you don't want to get into that game. You just want to stay disciplined and keep looking for stocks with good fundamentals and just ignore all the chatter that's out there, ignore a lot of the economic indicators. So just really stay disciplined to it. Um,
One of the questions before you move on, one of the questions that I had from a subscribers and a bunch of Alpha Pick subscribers that asked me was you started buying gold. I think your first gold pick in the Alpha Picks portfolio was June or something. I think it's up like 80%.
yeah,
We don't have to go into the name, but you've had since then 3 or 4 other gold buys in the portfolio. Was the decision to go into gold part macroeconomic?
not at all.
Okay.
Not at all. It's our model is a bottom-up model, so we're looking at the fundamentals of companies. So we, recommended these gold stocks, but you could have, called them widget stocks. Okay. It identified sort of the crosshairs of growth, value, and profitability. It does not know what the name of the sector is, does not know who the CEO of the company is. All it does is it looks at the data. And
Okay.
it looks at historical data and it looks at forward data as well. So our model is forward looking because what we do is we take consensus estimates from analysts, so we're looking at revenue growth, we're looking at earnings growth, we're looking at EBITDA growth. There's a whole bunch of growth metrics that we look at, and we take the consensus from the analysts and we plug it into our algorithm. So it is forward looking, but our model has no idea that what the name of these companies are, what the sectors are. It's a pure bottom up approach, and it's looking for companies that have the best growth, the best value, the best profitability. And what's been happening is and the model has a good way of doing this. Sometimes um, there is a concentration of companies that emerge to the top of the model at a very specific period. And I remember when we first started Alpha Picks, like more than 3 years ago, it was recommending energy stocks. And the energy stocks actually had sold off like incredibly. We started in July and they almost did not want me to launch Alpha Picks because the performance was so horrible in like April, May, and June, and the energy stocks which were in there were getting crushed. And then it even added more energy stocks. So I remember when we launched the portfolio, like almost 45% of the stocks in Alpha Picks at the time were in energy. And sure enough, like starting July, energy stocks just started to take off. People
Take off.
realized, like, wait, these companies are still growing. The values are awesome. They're very profitable. So sometimes there will be periods of high concentration in certain industries or sectors. And that's, I think, what we started to find in like May and June. More and more gold stocks were coming to the top of our screen based on those core factors that we look at. So it has nothing to do with a macro approach. It's pure bottom up.
Okay. No, you guys caught, but when I first joined, you guys caught SMCI, and that was
Yeah.
one of the big winners. And so, ever since then, I think it hasn't been solely focused on AI, which my personal portfolio is heavily focused on AI. So I use the Alpha Picks portfolio to kind of balance. I know I listened to you before, and you talk about a barbell approach.
Right.
And so I use Alpha Picks as my barbell approach because I am not a small cap investor, and I consider most of Alpha Picks to be small cap, even though you do have some large cap in there. I consider it to be a heavily weighted small cap portfolio because you're
Sure.
looking for the growers.
Yeah.
And so that's what small caps are.
And it's not like we're looking for the small cap stocks. It's just the model is identifying companies that have growth and value, and many of those are coming up in the small and mid cap segment. And our performance overall, we going back to 2010, we've outperformed the S&P 500 every year since 2010. But there were a couple years, especially when there was such a concentration risk in the Magnificent Seven, that performance really narrowed because nobody wanted to be have small cap stocks. And so certainly when you're in a period when interest rates are moving up, you don't really want to be in smaller mid cap stocks because leverage typically is not good for that sector. But we were still able to identify companies in the portfolio that were quality small cap companies that had profitability. And boy, like when the Magnificent Seven stocks, started to like decline or didn't have the same like lust that it had in 2021 and 2022, Alpha Picks did fantastic as you saw through the performance. But AI is definitely that boom, Gary. From my perspective, it's really just in the beginning stages. So it's going to be harder and harder to find companies that don't have AI in it because, like, almost everyone is using AI. Like, you're using AI, I'm
Mhm.
using AI, and it's really like the very beginning of the internet boom. And I guess when we had the internet boom, we had a couple things happening at the same time. You had internet, you had mobile phones, you had powerful computer processing, all sort of happening at one time. And there was a bubble that occurred. Um, what I find very different about this is AI is about scalability and productivity. So it makes companies and it makes individuals very efficient. So it actually helps your bottom line. Now, companies are putting billions and billions of dollars into it. And there are companies out there that are AI companies that have no revenue yet or no earnings. We would never be investing in companies like that. Okay. We're looking at these core investment metrics and any AI stock that we're recommending, it's got earnings, it's got revenue, and it's got a good valuation framework. So there is a bit of safety in terms of the AI that you're getting where you're going to alpha picks. And you can count on that to a certain extent that we're not going to be going to companies that don't have any revenues or earnings. But it is becoming more and more a part of everybody's everyday life,
Yeah,
including corporations.
you're looking at a guy who traded pets.com back in 1999 and made 300%. I remember 300% in a day because they announced they had pets.com as their URL. So I view it as those of us that have been around during the 2000, this just feels way different. And it's an actual physical thing you can put your hands on and you can use versus dial up internet and using pets.com and stuff like that. So, again,
Yeah, and look at this chart on the right. I mean,
yeah,
look at the amount of money that Microsoft, Amazon, Alphabet, and Meta are, putting into it in terms of their capex. And these are companies that are the cash kings of the world. All right. So they can do it, they can make that investment. And we have the benefit of using things, we're not recommending stocks like, ChatGPT or out there or Perplexity were a stock. Like we're not in there ourselves, okay? We're going into the companies that are using AI and are becoming more efficient. And those are the ones that we tend to recommend. But as you can see, the capex is just going through the roof. So I do fully believe, people could talk about bubbles, and you could say, in 2000, 2001, 2002, we were in a bubble. But when you think back on it, like, look how much we're using the internet now
yeah.
compared to then. It would have been so worth it to stay in those stocks back then.
It's kind of like, I invested in Netflix when they started their streaming platform. Just because I was in the internet world, I was actually part of the cable company that provided high speed internet. and I saw the ability of Netflix, and I literally looked at our internet traffic as a internet provider. And I said, everybody's streaming Netflix. Why wouldn't I buy this stock? And it's just one of those things that clicks in your mind when you have a stock that you find. And I'm sure you guys found it, like you mentioned with the energy stocks early. I'm sure when you picked gold and you saw gold starting to pop up, you said, "Ooh, something's happening with
Yeah,
this sector."
yeah. And that's exactly what we see. When I see like a number of companies all sort of coming to the forefront at one time, you can tell something's going on. So we were just talking about AI, a lot of capex going into that, and the market is kind of in a good place now because we just had the first interest rate cut, um, and we definitely have, unfortunately, a weakening labor market. But what that means is there's a high likelihood that the Fed will continue to reduce rates if the labor market weakens. Um, Even if we see sticky inflation, which could be caused by tariffs or a number of other factors, nobody, including the Fed, wants to see a weak labor market. So right now, the Fed dot plot project, they're looking for two more rate cuts in 2025. And if we actually look at the interest rate traders, this chart reflects the interest rate traders. And for the October 29th FOMC meeting, you'd see 94.6% of the interest rate traders expect a 25 basis point cut. So definitely the clearly the majority of interest rate traders are looking for that cut. Only 5.4% of traders expect no cut at this time. So high probability that the will continue. And that's partially what's fueling the market to new highs here. You have all that capex spending, you have the prospect of rates coming down, but you can certainly say, it's kind of baked into it. But people are still nervous. And that's like one of the reasons why gold is continuing to do so well. There's political turmoil, there's macro risk. While we see weakening labor data, um, it has contributed to monetary easing, as we saw with what the Fed has done and what they're likely to do. But that does raise questions about economic resilience. Gold broke out above $4,000 an ounce for the first time this week, climbing over 50% this year alone. Again, fueled by political turmoil, Fed uncertainty, global tensions, but also there's a lot of central banks around the world that have been buying gold as well. So they're pretty nervous too, with what's going on. So it just seems to be going higher and higher. And I think as long as this uncertainty remains, we could probably see gold being pretty firm here.
Will you guys? Let me ask you this: does the quant or the Alpha Pix portfolio? Will you ever see a crypto stock in the quant in the Alpha Pix portfolio? Do you think, or is that just
Well,
a
we
world
we had a
where?
Bitcoin stock in the ProQuant portfolio.
Oh,
So
okay.
certainly I don't have any rule that would prevent, there's no parameters or criteria that would prevent a crypto stock from going in.
What about a
But
leveraged ETF?
yeah, to me, there's a difference between like looking at an ETF and an actual co company.
Okay,
So we don't put ETFs into either of the
either
products.
portfolio. Okay.
Yeah. So we're looking at surely pure corporations. There's no ETFs, but we do, and I'm glad you mentioned it. If you are a Seeking Alpha Premium customer, you get ETF quant grades, you get quant grades for REITs. And for
Hmm.
stocks that have dividends, we actually have quant ratings, dividend safety ratings, dividend growth ratings for stocks that have dividends as well. So there are a number of quant features and tools that are out there, and we do have a screener for ETFs.
I
So you
love
can
it.
see which ones rank the highest and which ones rank the lowest. Um, so I can quickly just here, this is like, valuations. It's showing you, yes, absolutely, the market is a bit stretched. And of course, the Mag 7 stocks are very stretched as well. And most of them are actually facing a period where their forward growth is going to be lower than their year over year growth. And that certainly is making people nervous. But I actually think that was largely like reflected that concern of future growth being lower, that actually happened back in April when you had the
Right.
foresight to like take advantage of the market weakness. I think at that point, people were really concerned about forward growth, and your timing was perfect in
There,
regards to.
there was a day in April where I think I hopped on one of the spaces, Twitter spaces, and I said, just, the best advice you can hear from a talking head today is just shut up and buy.
Yeah.
Have five stocks. And I constantly have this,
Did
Steve.
anybody say that back in April?
But I think I may have been the only one. And I constantly go on Twitter spaces and I remind the guys that I'm on there with that, hey, I said this in April. But the reality of it is, I always have a list of five stocks that if they pull back 10% or more, I just buy with no questions asked. And I'm constantly changing those five stocks. So, in my mind, I think Seeking Alpha has provided me the ability to look at those fundamentals and look at that quant rating. And if those five stocks are anything less than a buy, then I take them off that list because fundamentally it might not make sense for me on a 10% pullback to just shut up and buy.
I think that is a very good rule of thumb. And it is almost as if you saw this presentation, which you did not, and it aligns perfectly. It's like you set this up, you teed up my golf ball for me, Gary, on this. It's like amazing that you actually just had those words come out
By
of
the
your
way,
mouth.
I have to thank you for your January and your June picks because I actually had events around those on my own podcast around you announcing these things. And good God, I mean, you have done it 3 years now in a row for me. I didn't trust you the first year. I had questions about the second year. The third year, it was just shut up and buy. And this year, it was just shut up and buy, honestly.
Yeah, I think this year the top 10 are up close to 45 or 50%. The year before was crazy. They were up about 120%.
Yeah.
The year before that, I want to, well, we have articles, but it was up huge. I can't even remember what we were up. So, and this year when we did it in June, which is only a couple months ago, the top 10 that we picked in June are up over 50%.
Wow.
So I do have a good track record at that. But going back to what you were mentioning before, having that rule of thumb when the market comes down, I actually had my quant team do a study on this. And what we found is if you went back to 2010 and you looked at five pullbacks in the market that were 15% or greater, just using that rule of thumb during those pullbacks,
Just buy the top stocks.
if you bought, okay, the S&P 500, not even the top stocks, but say you bought like SPY, when the market pulled back 15%, if you held it for 2 years after that point, you are up on average close to 50%, 50.
Wow.
So that's just buying the pullback when it's down 15% at that point in time. And yeah, it could go down 20, 25, 30%. You just kind of ignore it. You say, okay, it's down 15%. I'm going to buy the S&P 500 here. You wait 2 years, on average, it was up close to 50%. If you bought my top 10 strong buys at that time, you are up on average 117%. So it's really is a good rule of thumb. Now, it doesn't work that way every time. This is an average, okay?
Right.
But it's a heck of a return for the average.
And I don't think people put enough validity into the psychology of actually doing the buying when you're down 15%. It's for anybody who has been in the market. I personally feel very uncomfortable buying when it's 15% down. But I've got those rules and I've found the psychology of rules. And that's why I love Alpha Picks, is because it's a rules-based portfolio. And you guys have taught me about managing the portfolio, some things that I didn't even recognize that I was doing wrong. But the rules-based portfolio is kind of how you take the emotions out of trading and identifying, oh, I think this is going to go this way. If you've got a rule and it breaks the rule, get it out of your portfolio. If one enters with a rule, then you add it to your portfolio. So I think this highlights exactly the point of having those rules. If you have a 15% pullback, you just buy. Just shut up and
Yeah,
buy.
it's a data-driven process, and it has shown over time it works in your favor. And of course, it's not right all the time,
Right.
but a good portion of time sticking to these disciplined rules it definitely benefits you. So having said that,
This was my favorite.
right, going over the economy, going over where the market is, listening to people, whether it's Jamie Dimon or Jim Cramer or Larry Kudlow or anybody, just ignore it.
Yeah.
Okay. Just focus month in, month out, buying stocks that have good fundamentals. And if the market does correct, as we just highlighted, don't even try to time it. Don't say, well, I'm going to wait for it to come down 20% or 25 or 30% or 50%. Okay. There's a good rule of thumb. Gary uses 10%. I'm using 15% during those corrections. It benefits you. Just know you're going to have to wait out the cycle. But 2 years after that cycle, your return should be much better and you're paid off. And the importance, as I said, is like doing this like every month. I'm a big believer in dollar cost averaging. So whether you have a handful of names or you just want to continue to add new stocks to the portfolio, it's the discipline and it's the consistency that creates excellence over time. So let me tell you a little bit about Alpha Picks quickly. I know we've been on for a while. So at this point, I'm just going to show you like what the returns are year to date. On the right-hand side, you can see Alpha Pix is up 35% versus the S&P 500 up 14%. That's the S&P market cap weighted. A 1 year return on the far left, you can see it's up 42% versus the S&P up 17%. Over the last 3 months, in the center, it's up 25% versus the S&P up 8.5%. And since inception, up 251%. So on all these various points, we are in the winner's circle.
Hey folks, just a quick interruption. Want to beat the S&P? Check out the Seeking Alpha bundle. Get premium research, Alpha Picks exclusive stock screeners, and unlimited analysis, all with a free 7-day trial if you choose to just get premium. You'll save over $150 on the bundle. So get loads of features to level up your investing. Choose the plan that's right for you. Get special savings at Linktree/Daily Stock Pick. Now back to the video.
I am heavily invested in the Alpha Pix portfolio. And what I've done, Steve, is I've actually used your barbell approach, which is I take my technical trading expertise with my other partner, TrendSpider, and I use my my algorithms in there to actually add to the winners. One thing that I wanted to ask you about is Peter Lynch's quote about adding to, cutting your winners and it's like watering your weeds. I forget the exact quote, but it's a famous quote. When would it, like if Bluebird is a great example. When you guys picked that back in February, it consistently went down, but recently we've seen that one just explode.
Yeah.
So I've been very careful in using that kind of stock as, hey, I don't want to get out of the Alpha Pix portfolio just because it's down. But what I have used is a weighting approach, which means that I'll typically go into Seeking Alpha, look at the ratings of these things, look at the performance, and then I'll make a determination, but I never get completely out. But Bluebird made a recent, like heavy turnaround since you picked it.
Yeah, I think trying to think at what point that was picked.
I think it was February.
I feel like we
February of
top
this year.
picked it.
Yeah.
Like it was like somewhere over here.
It
The
was
stock had
almost
been
at
doing well.
it was at the exact top, I think.
Yeah, it was like at the exact top. And this has happened on a number of occasions. Like we'll recommend stocks. And then for whatever reason, like somebody could issue a short report or, there's some kind of investigation that starts out of nowhere and the stock price itself will get hammered. And what I tell people is like, okay, look at the factor grades, see if they change. Okay. And you can see the growth. These factor grades are all sector relative. So, as Gary mentioned, the stock has exploded lately. The valuation is not as attractive as it was 6 months ago because it's got a B grade versus an A minus grade. Again, this is versus the sector. So, versus the sector with a B, it's actually a fairly attractive valuation framework compared to the sector. But the growth at like A minus is the same place it was 6 months ago. Profitability is an A minus, which is the same as it was 6 months ago. But what you're seeing here is the analyst revisions are an A plus now versus a B minus. Point being, if you went into here, okay, and you just like clicked on growth and you saw that the growth was still fairly solid and nothing was changing, the stock price is coming down, but analysts aren't taking their estimates down. Okay. And in some cases now, you could see analysts are actually taking their estimates up. So when we look at this, in the last 90 days, five analysts have taken their estimates up, zero have taken it down. And the model is saying the numbers are good. The numbers are good. It's not paying attention to that like overall environment. It is looking at the momentum grade, and that momentum can act as a circuit breaker. So if it does go down a certain percentage, it will default to hold because it does say, all right, after this kind of pullback, something kind of crazy is happening. But it had a pullback, but not like a crazy pullback, not where it's down like 50% or 30%.
Right.
So it stayed in the model. And sure enough, like whatever news was happening then, which I think had to do, I'm not sure if it was like windmills or like, um, energy efficiency, like not being in favor or something like that, it was going on there. It passed. And these things do pass, and you wait just like 2 quarters. And if the companies continue to beat expectations, over a 2 or 3 quarter period, you're golden. And these stocks do come back. And that's exactly what happened with this. This thing just, it hit its low and then it just started
Yeah.
ripping back.
Yeah. And
Um,
I used my technical trading to start adding to that when I saw, I think it was the 9 and the 21 specifically just spiked up on that one.
so I'll tell you what Alpha Pix is. We take out of all our quant stocks, we have 5,000 stocks in our universe. Any given day, there are going to be 350 to 400 strong buys. AlphaPix makes it easy for you. We simply provide you with our two favorite strong buys every month. On the trading day closest to the first of the month and the 15th of the month, we send out an email. We also have a platform that we put it on. So you get to the platform, we write an article on each of these stocks. You can see the price that it comes into the portfolio. And I'll actually give you sort of a vision of what this looks like here. So this is AlphaPix. This is a separate platform. Again, this stuff does come out on email. If you go to the analysis, you'll see some of our recent reports, and we actually have like weeklies that we come out with in addition to the articles on the stocks, and we keep every single one of them. If I go to performance, I'm going to show you a couple of the stocks that are there right now, and I'm going to show you the returns of some of the top winners. You can see App11 is up 1,571%. We actually sold some of it because we have a rule. If it gets to be more than 15% of the portfolio, we reduce it down to 10% position.
You
So
actually
can see
trimmed that one at the top
we
too.
trimmed it. We trimmed it
At
at
the
the top. And we did that with Supermicro as well.
Yeah.
So Supermicro is another one that was up 968%. And we trimmed that one at the top as well. And then actually all hell broke loose for that company.
Yeah, that's a good question. Will that one ever get back into AlphaPix?
Potentially it could.
Because that one and GCT are the two that I think over my investing with AlphaPix, those are the two that I really had questions about because I know you guys even went to the warehouse with GCT.
Yeah, which honestly, I still like that company a lot.
I know.
It was such a drag that there was a company that issued, I think there were two or three
Right in a
hedge fund
row.
oriented companies that issued short reports on them. And that's what will really happen. Like you have to be so suspicious
Yeah.
when those companies that just focus on shorting stocks because their clients are hedge funds. So they're talking their books.
Yeah.
And it was really unfortunate because they'll try to identify small and mid cap stocks that have had a huge run up where the float isn't that big and they'll issue a report. And sure enough, when they issue those reports, the stocks get hammered. And unfortunately, that's what happened with that company. The company itself, they were just making cash like hand over fist.
Yeah.
They were making acquisitions. They were buying new warehouses. And like one of the reasons we went out to that warehouse was because somebody issued a short report. And honestly, like one of the warehouses is close to where I live.
Yeah.
And the guy that issued the short report, they said they went to the warehouse and they saw no truck traffic. And I contacted the company and I was like, do you mind if I go visit your warehouse tomorrow? This is with 1 day notice.
Right.
And they're like, yeah, no, you can go visit the warehouse. I go to the warehouse, I go in, and this warehouse had shelves. It was like walking into like a super Walmart.
Yeah.
But the shelves are stacked from floor to ceiling, like 5 stories high. I felt like you couldn't fit a pencil in there. There was so much in there. And when I talked to the manager about what the guy's comment, with no trucks being there during the day, he's like, the trucks don't come during the day. He's like, they come at night. They're not going to want to deal with traffic. It was like, oh my God. Like the guy could have just walked in and one, he would have saw the warehouses full. And two, he could have just asked that question, where are the trucks?
But he sat like a private investigator in the parking lot and said, "Yeah, I don't see anything."
Right. Without like going inside.
And didn't even ask the company about it. I mean, I don't think he even interviewed the company about it.
He didn't. And by rule of thumb, I don't interview managers ever. I never go to like the C level. I just look at the data. But like after when that short report came out, I was like, okay, this place isn't that far. I kind of want to set eyes on it to see if that's the truth. And it was like so freaking misleading. It was like it just seems unjust in a way. So I wanted to sort of bring a little justice for it. And the stock still had a hard time recovering, but I think it
Yeah.
has done much better. Like,
It's a strong buy now in the quant.
yeah.
I was just
So
looking
let's
it
take a
up.
look at a GTC.
Yeah.
Uh,
GCT. GCT.
GCT. There we go. Eagle had
I mean, year to date, it's up 54%.
28. So
So,
totally recovered. Like,
yeah.
it's so unfortunate. But as I mentioned, we do have sort of circuit breakers and momentum.
And it
This
went, I
stock,
think it went to a strong sell, if I remember correctly.
yeah, and it's really unfortunate. It was based on the momentum grade. But I will say
Yeah.
that the growth did start to come off a bit.
Yes.
So
Hey,
when
that's a
that
good
growth,
question. So you
yeah,
told me in the valuation, you love the PEG ratio.
yeah.
What's your favorite growth that we should look at from a standpoint? Because I typically look at year over year revenue growth, but
Right.
I
So
know
here,
that's not like super granular.
okay. So for PEG, here's the PEG, just to highlight what Gary's talking about. On the valuation page, you can see we have a ton of metrics,
Hmm.
PE, EBITDA, EBITDA, price to book. But my favorite one here is PEG. And you could look at it on a trailing basis or a forward basis. We don't have it right now on a forward basis for the stock, but on a trailing basis, it's a B, and it's at a 41% discount to the sector.
Yeah.
So in terms of evaluation framework, and what PEG does is it combines the PE with the growth of the company into one metric. So it takes into consideration the growth as opposed to looking just at price over earnings. You bring that growth rate into it. So if I were to look at growth, and Gary just asked me what my favorite is, and my two favorites are actually forward revenue growth and forward EPS growth. Gary looks at year over year. Um, Year over year is important in terms of like the trend that's been set, the track record that they have. But my eyes are kind of looking forward. So I want to see what like the analysts have out there going forward for it. So I tend to look at a forward. And you can see the forward growth rate. And this is more of a CAGR where we're looking at year over year, which is just like 1 year over the next year. The forward is more of a CAGR, but you can see it's a little bit lower, that CAGR. So the growth has come down on the company a bit. Um, I think they benefited sort of from the pandemic
Hmm.
period where a lot of and their client base is global, but basically, they're making a ton of money by setting up these warehouses. And what happens is manufacturers all across the world want to put their products in these warehouses and probably have Amazon to blame for it because everybody's so used to Amazon Prime and getting everything the same day or next day. Companies learn quickly they can't be shipping something from Japan or
Yeah.
Vietnam or China and take a month and a half. They have to have it over here so I can have that product tomorrow.
Right.
And the guys at GCT saw this and they're like, okay, we're just going to start getting warehouses like all over the world so manufacturers can put their products closer to the clients. So that's part of their business and they charge rent. So if their shelves are full, they're making money. That's a
Yeah.
good thing. Like you want to go in that warehouse and like not be able to fit a pencil in because they're making a ton of money. When I was in that warehouse, not only were the shelves full, but you couldn't even walk like in the aisles. And
Yeah.
they're making money on that.
Yeah.
Like, and they do big and bulky stuff too. So there are like snowplow blades in there. There were like parts of like tractors in there. And like companies from, Vietnam or China or Japan, they'll ship over like parts of cranes, and that will be like in their warehouses, let
Jeez.
alone things like, treadmills or big couches. Um,
This is
so
one of my best, but my favorite Alpha Pick stories, by the way, because I think it was pulled out. I always viewed this one as being pulled out too soon because,
yeah,
like you,
absolutely.
I didn't believe those short
Yeah.
reports.
Yeah.
And I think I always view short reports just like you. I take them with a grain of salt because these guys make a tremendous amount of money when you short a small cap stock
In a quick period.
and they're just selling it and
Yeah.
they're just taking
They
a quick
they issue
profit.
that report, the stock comes off, and then they've covered their position
Yeah.
like within a week or two. And the stock often takes a long time to recover when something like that happens. I will say, like, the momentum grade kicked in, and it dropped down to like a D or an F. And then the growth started to come off a little bit. So those two combined factors led to that sell, which was a very brief period. It is a circuit breaker and it's part of the data-driven process. More often than not, it does tend to be a very safe feature, but every once in a while, you'll have something where it does happen with a stock like GCT, and it's kind of unfortunate that it happened because the stock did come roaring back.
Let me ask you, from profitability, what's your favorite? I'm going to ask you going down. And
Yes,
the first question, profitability, what's your favorite? The second question I have is from momentum. Does it favor short term or long term?
so profitability, my favorite is return on equity.
Okay.
And I know that surprises a lot of people think that I'm going to go for
I
like net
like
income
gross
margin.
profit margin.
Yeah, a lot of people like gross profit margin. To me, like this is a perfect situation. This company, um, oh my God, this company has, look at my other favorite is cash per share. Okay. So I
Oh,
like
wow.
return on equity. I like look at cash
They
per
got
share.
$8 per. Oof.
$8.68.
And it's trading at $28.
They're like printing money. It's
Yeah.
like, and people were worried about that. Look how
Yeah.
much cash they have per share. Um, so cash per share, RO, return on equity are my favorites. And for momentum, we actually look at it at four different time periods. So I'm looking
Okay.
at 1 year, 9 months, 6 months, and three
So
months.
it's pretty evenly spread out, not
It's pretty
A
evenly
minus.
spread out.
Okay.
The I would say historically the most important of the momentum factors would be the 1 year. That typically would have the highest weight. Um, but I kind of spread it out from 52 weeks to shorter time periods.
The other
Uh,
question I have about revisions.
yeah,
I have seen some stocks, and I can't think of one off the top of my head, where there's one analyst. And that's one of the things where I go to and I look at the number of analysts that are rating this, and it will have an A rating because one analyst raised it. Do I have to
right.
call into question the one analyst, or should I worry about it?
I think there's safety in numbers. So if you
Okay.
have a
More.
company where there are 20 analysts that have taken their estimates up and zero have taken it down, you can feel to a certain degree safer. But even with one analyst out there, a lot of times, with the smaller companies, and honestly, sometimes it's not even the smaller companies because uh, investment research houses like Morgan Stanley and Goldman Sachs, they keep cutting back in the number of investment analysts that they have. So they're focusing
Yeah.
more and more on the larger cap stocks. So they're going to miss a lot of stocks. And that's why when I showed you the performance numbers, like the S&P 500 performs
Hmm.
so much better than Wall Street analysts because it covers more companies just with the S&P 500, let alone like a Russell 2000 or 3000. So having one analyst, it is a little bit risky, but we get a lot that the bigger houses don't get by focusing on that. We do have a rule of thumb, though, that in order to have coverage from a quant perspective, there has to be at least one professional analyst
Okay.
covering the company.
And I will tell you the game changer for me was that Analyze with AI, which is right up on the screen there.
Yeah,
Um,
we'll go back to
that
that.
tool just I mean I literally before I buy a stock, I have to go in there and I read all about it and I look at the Seeking Alpha analysts, positives and negatives. I read about the quant rating because it brings up certain things in that quant that I may not even have looked at because I'm so focused on the stats that I like. And then I'm like, ooh, yeah, that's a good thing. Or, ooh, yeah, that's a bad thing. And so I think that's just a game changing thing that you guys launched recently. And I personally, it's like having your own analyst do a report for you almost every morning. And you can see when it was created. And if it's older, then more than likely it's going to be updated. I think, the oldest ones that I usually see are like a week old or something. It's not
Yeah, they get
outdated at
updated
all.
pretty rapidly. And
Yeah.
of course, the quant grades get updated every day.
Every
So they
day.
may stay unchanged, but we're putting it through our system every day. So those are refreshed on a daily basis.
Yeah. Yeah.
Um, so there are just some magnificent tools
I love it.
on CK Alpha Premium. I often recommend to people that they get both premium and alpha picks
Hmm.
because even if you're a very engaged or sophisticated investor, the beauty of alpha picks is that we just bring you our favorite ideas right there. We serve it to you on a silver platter. So it just saves you time. We're doing the research for you. But Seeking Alpha Premium enables you to have the portfolio tools. You could do research on other stocks, or you could just monitor your stocks and that's worth the price right there. If you own a stock and it falls from a strong buy to hold or sell, you have the ability to know that on a daily basis. So it's really worth having premium. But again, Alpha Picks, it gives you our favorite stocks. And as you can see from the performance on it that I showed you, its track record speaks for itself.
Yeah, and
Uh,
I will tell you from a premium standpoint, I think it was last year at some point, we found one of your top stocks, which was PSIX, which I know is a top second half performer and has been doing well. We found that at $4. And I think that's somewhere in the 80s right now. Yeah, 93. And it's up 6% today. I didn't even know. I mean, I own this stock and I didn't know how good it was doing. But this one moved to a strong buy at around $4. And I remember somebody bringing it up to me and I said, well, how'd you find this? And he said, well, I went down to top stocks and it's the top stock in the quant.
it was, yeah.
And we rode it from $4 up to like I think 50 or 60 until you picked it. And then you ruined our entire train because you picked it as the large one and now it swings very high and very low.
It's still ranked number 28 out of
Yeah,
4,300 stocks. Within
crazy.
sector, it ranks 4 out of 619, and the industry it ranks 1 out of 13. But if you take a look at the 3-year history on this, let's see if this comes up. You can see we actually put our strong buy on this
That's
at
where we found it.
$4.49,
Yeah.
and it's currently $93.
Yeah.
And that's, this is this ratings page. This shows you our transparency. We show you what the factor grades are, what the price is
Every day.
every day that we have that rating there. And if the rating changes, you will see that as well. And there was a brief period where this did change to a hold.
Yeah.
And this is one of the reasons why when people say, oh, should I sell a stock if it goes to hold? I'm like, no, hold means hold,
Yeah.
sell means sell.
Yeah.
Okay. Because this quickly went back to a strong buy. And people will say, well, how can stocks move so quickly from a strong buy to hold? It's a data-driven process.
Hmm.
Stocks trade thousands of times a day, and every time it trades, that's a new vote on the valuation framework. So it's going to make movements up and down, and you have to accept that as an investor. You can't blindly say, I'm going to just pick this stock and assume that it's going to be a strong buy forever. From the second that you pick that, everybody that's purchasing or selling that stock right after the time that you bought it, and that's happening thousands and thousands and thousands of times, that is a new valuation framework that's being put on that stock. So the reality is all stocks are data driven and most investors, they're based in emotion. They've made an investment decision. They want to hang on to that stock. A lot of people will inherit stocks and they want to own that stock because they inherited it from their parent. That's no way to make an investment decision. Okay.
Hmm.
You make your investment decision based on how that company looks versus other companies in the sector. Is it growing faster? Is it more profitable? Does it have a better valuation framework? Do analysts like it? This is how you make an investment decision. It's not based on somebody else giving you advice. It's not based on if you inherited it. And you can't buy a stock and say, I'm going to close my eyes and look at it 5 years later. Okay. You have to realize every single day that stock is coming into question and people are making buy and sell decisions on those stocks. So the beauty of this system is it lets you keep your finger on the pulse of what's happening. You can instantly characterize if these stocks are buys and sells on a daily basis. And it really doesn't take that much time. You can look at your portfolio in 3 seconds and know if you have to do anything. That
Yeah, I
doesn't
tell
take time.
people, I when I started using Seeking Alpha, I was having to go to, I had two different brokerages and I had to go to different brokerages. I imported the portfolio and I'm just able to look at the quant rating and look at some 52-week sliders that I have up there. And I'm able to say, okay, this one, I believe in this stock. It's not trading at its 52-week high. I may want to look at it because it's a strong buy and maybe the valuation got reset. I think what isn't taught to a lot of people is that every time you buy a stock, somebody's selling you that stock. Somebody says, I'm willing to get rid of this. So you have to have conviction about, I think it's going to go higher because somebody's selling you and they're saying, I don't think it's going to go higher.
Right. And you can't be so centric to think that you're the only investor in the
I
world.
know.
It's a humbling experience, but you're making that investment decision and following you are thousands of other people making that investment decision
Yeah.
on a daily basis after you've made your investment decision. That's why I tell people valuation frameworks change, every second of the day on these stocks, and you have to be somewhat aware of it. But if you have a little bit of that awareness, if you have the discipline to be buying stocks, it can be very, very rewarding, especially over a long period of time.
Yeah, yeah. No, I mean the Alpha Pix portfolio up here. Last time we met about a year ago, and you were on the podcast, I told you that my dad is a longtime Motley Fool subscriber, and I was touting Alpha Pix to him and you said, "Well, show your dad the performance." And now when I told him that I was in, you were coming back on the podcast, he's like, "Tell Steve thank you." And we have canceled our Motley Fool subscription because the Alpha Pix portfolio, and my parents are in their 80s, and I manage their portfolio. And it was funny because until I retired in 2020, they didn't believe I was actually an investor. They thought I was just gambling and doing these things. And then they said, "Well, how'd you get these returns?" I'm like, "Well, I use these tools." And so now they let me manage their portfolio. So, from Mr. and Mrs. Vaughan, a sincere thank you because their portfolio is higher than it's ever been. And I
That's
contribute
awesome.
Alpha Pix to one of those reasons, not just me. Alpha Pix was a big portion of their gains over the last year or so.
Well, I
So I
hope they
appreciate
continue
it.
to do well with it.
Yeah, no, and honestly, I mean, just the fact that you have this data driven approach and it's no nonsense. It takes, I always say technical trading takes emotion out of it. Alpha Pix allows me to take emotion out of my investment decision because you guys give me the picks. And I'm able to look at the 200-day and the 50-day and say, okay, I want to add to this one because it's a winner and take certain technical strategies and then add to those winners. And like I said, I hate cutting the losers, but I use that holding percentage and I make sure that the minimum amount that I have in my Alpha Pix portfolio is that holding percentage. And I just rebalance every quarter, I think,
Right,
every
right,
kind of
right.
a couple months.
Yeah, no, it's definitely a good approach. You're definitely using a good approach. You don't have to rebalance every week. I think the rules that you've set up, especially if you're looking at the market during a corrective phase being down 10%. I'm looking at it down 15%. They're very closely
Oh, I've got
aligned.
a list that if it's down 5%, Steve, I'm buying. I mean, I've got different levels of and that 5% is typically a meme stock or something that's really moving. And if it's down 5%, but it's got good fundamentals, you look at Palantir, you look at Robinhood. I refuse to bet on Robinhood and pick Robinhood. But when it got to 120, I said, if this dips under 100, I don't care about the percentage. If it dips under 100, I'm going to buy it. It dipped under 103 times. I didn't buy it. And then the day I bought it was the day it gets added to the S&P like 2 weeks ago. And now I'm up 50%. I just got
That is awesome.
lucky because the rule was there that if it dips, I'm going to buy it. And I got scared a couple of times and then just buy it. And you get lucky like that sometimes, but you got to identify it to be able to do it. And that's
Yeah,
what Seeking Alpha helps with.
yeah, and I think the important thing is you're doing the research on the stock, so your winners are going to be bigger than your losers, and that's something actually. I'll take us back because I want to just share that really quickly because that is a really important point. So I'm going to share my screen here again. and I'm going to take us to Alpha Picks, and I'm going to show you on this performance. So I'm going to take the returns. I already showed you. Not all of them are winners,
Right.
but look at the return on some of these winners. Like we're up. Look at how many are up over 100%. Okay, and some of them up like 1,300%, 1,500%, 968%. Now I'm going to take us and show you the losers.
Yeah.
Okay, and we do have losers, but look at the returns on the
GCT
losers.
right there.
Yeah, and that's so unfortunate because if we held on to that and we didn't have to get out,
You'd be up.
like, we'd be close to the point that we put it in.
Yeah, it's at
So
28, so it was 33.
yeah, but you can see there's one stock that was down 52%. The other is like 47%, 40, 31, 30. And those are losses, okay? But the returns are so much greater.
Well, and not just that, Steve. What Alpha Picks taught me was, and the rule that I set up when you guys suggested was put in 1% of the new buys.
Right.
So I maintain that buy. If it starts losing, like the last couple of times, I think I put in more than 1%. And the current pick, which is down right now, I've got more than 1% in there, but I've got a level and an alert to set, okay, I'm going to cut it back to the holding percentage if I lose. And it goes back to that Peter Lynch thing, cut your losers and add to your winners. And just make sure that you're doing that with the portfolio. And honestly, it's a 5 minute a week approach.
Yeah. Yeah.
It's
It's
not
nothing
overwhelming.
extra. Yeah.
No. So no, I thank you. And thank you for taking the time to, a douchebag like me kind of, grace me with your presence. And all my subscribers, let me just make sure. I wanted questions from subscribers. The bull cycle, the last few picks were gold stocks, then GCT, SMCI. We asked about that one. Yeah, I think we've answered every question that my subscribers had. So thank you so much for coming on. I really appreciate it.
Absolutely.
I tell Rena that I'm going to be on Investing Experts podcast every quarter. I think I'm going to invite you on at least every year, or if there's something big if we have another pullback, Steve, I'm bringing you on. If Trump pulls out another big board in the Rose Garden, I'm bringing you on because that was the best advice was, hey, this portfolio, it should outperform. It's never guaranteed, but it should. And I think it calmed a lot of people in the audience down with Alpha.
Yeah, I'm glad you heeded the advice back in April when I gave that. There were not a lot of people, and I had people comment just saying, "Wow, you showed like no nervousness, no anxiety." And it's like it was helpful to them to see somebody who was calm and just like looking at it from the perspective, the data-driven perspective that I had, the historical perspective that I had. And I was like, yeah, this is a good time to like buy the market here based on what's happening. And I'm glad that you heeded that advice and that your
I
your
didn't just
subscribers
hold.
benefited from it.
I didn't just hold, Steve. I went in large with some. I sold Apple at 260 last year just based on what I saw. Everybody was holding on to Apple in December. There was no fund manager that was going to sell Apple at 260 and pay capital gains. They were all going to wait to sell in January.
Right.
And so I had a bunch of cash on the sidelines, and it was sitting there. And I said, in April, let's just go all in. So
You did well. Congratulations.
You were a big part of that decision because again, I remember reading that specific newsletter and it's in Alpha Picks, by the way. If anybody wants to go back to the April letter, you can see everything that Steve wrote about there in Alpha Picks. So I appreciate it. And again, you're coming on at least every year, but if we have a pullback, you're coming on again.
Anytime.
Thanks, Steve.
Thank you.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.